All right, y'all. So today I want to go over, by special request, the TTM Squeeze. I've been meaning to do this video for like over a week now. Finally getting around to do it, and I'll be uploading it here soon. So just gonna kind of go everything that I think that you need to know on this. If you enjoy the video, leave a like, leave a comment. I'd appreciate it. All right, let's get into it. So let's just start off with what the heck is the TTM Squeeze, right? So the TTM Squeeze, and this is probably one of my favorite indicators. I use a lot of different stuff when I'm analyzing my trades and when I'm, analyzing entries and exits and when to pull the trigger. The TTM Squeeze is definitely something that's higher up on my list when considering when to enter a trade, right? So basically what the TTM Squeeze is it's a measure of contractions and expansions in volatility, basically. So it's just a way to quantify that for you. So the TTM Squeeze, basically what it does is it can help you find and catch huge moves in a stock before they happen, okay? Which allows you to make huge profits and maximize the efficiency of your trades by finding better entries, okay? So the squeeze is essentially just the contraction in volatility or like consolidation, right? So a lot of times you'll see that on the chart. You'll kind of see it's consolidating sideways, and you'll also see that TTM squeeze is on, right? And then once it expands out of that consolidation, the TTM squeeze tends to fire long, right? So they kind of go in tandem. Basically a stock is in a squeeze when the Bollinger Bands are contracted inside of the Keltner channel, right? So that's two things that I plot on my chart most of the time. If I'm on mobile, that's actually what I use. I use the Bollinger Bands and the Keltner channels on mobile. I actually don't have the TTM Squeeze on mobile just because it's not as good, at least on Thinkorswim. It's okay on TradingView and TradeStation, but on Thinkorswim, the TTM Squeeze is just, it doesn't have all the bells and whistles, and it doesn't have the right appearance to me. But I can get everything I need done plotting the Bollinger Bands and the Keltner channel, okay? And I'll show you guys that here in a minute. Okay, so when the Bollinger Bands expand outside the Keltner channels, it is coming out of the squeeze and firing, okay? Either long or short. If it's going up, it's firing long. If it's going down, it's firing short, okay? When this happens, there is an expansion in volatility, and the squeeze is said to be firing, right? Firing long if it's a move up, firing down, firing short if it's a move down, right? Like I said above, okay? No matter what time frame you're looking at, once a stock is about 2 to 3 ATR away from the 21 SMA, the move tends to get exhausted, and you should be looking for an exit around that area. You can also use Fibonacci extensions, which I also frequently use. I would say I use Fibonacci extensions more often when I'm plotting my targets for these, but specifically the 1618 extension, okay? So how do you find these TTM squeezes? So basically, for me, I just have a set of certain stocks that I watch, that I have on my watch list, okay? But I have used a Thinkorswim scanner before, which will actually scan for stocks that are currently in a squeeze, right? And if you guys want the script for the scanner to scan for these stocks that are currently in a TTM squeeze, just let me know. Leave a comment in the comment section, or you can ask me in the Discord, okay? So what are your triggers for long entry, or triggers for short entry, vice versa on these bullet points, right? So triggers for long entry is the stock has to be an overall daily uptrend, right? If you're going to take long on a squeeze, right? Especially before it fires. And then also the moving averages need to be positively stacked, right? So what do I mean by that? That means that the 8 EMA is above the 21 SMA, which is above the 50 SMA, which is above the 200 SMA, okay? And then obviously the stock needs to be above the 21 SMA as well, right? Now, if you're looking for, it to fire short, then it should be below the 21 SMA, okay? Bullish or positive momentum needs to be present on the histogram or other momentum indicators, right? So I actually will use DMI, ADX, RSI, MACD, or the TTM wave, right, which helps, determine how much momentum the stock currently has, right? So you need to be looking at positive momentum on the stock, right? You don't want to be entering long on a TTM squeeze if there's currently divergence, right? So that's actually times where you might be thinking about going against the trend and possibly going short, right? Or you can also wait for the TTM squeeze to fire short, right? Like if you really want to be patient, you should wait for those red dots to turn green and wait for it to fire short, okay? But you have to be careful of fake outs too, because a lot of times, I've been in a couple of trades where it will look like it's firing long and then all of a sudden it fires short, right? So you have to be wary of that, okay? So again, what are your targets? So again, it's the 2 to 3 ATR away from the 21 SMA. The Fibonacci extensions, the 1272 or the 1618. And you can also use major moving averages, like I use the 21 SMA, 50 SMA, or the 200 SMA for that, okay? And then how do you trade the TTM squeeze? Meaning, like, what instruments are you going to trade them with, right? So you can just do straight shares, right? Which, I think I kind of listed these in, orders of priority, right? So shares kind of trumps everything, right? Just because you don't have to mess around with time decay or anything like that, right? You don't have to mess with the Greeks, none of that, right? But if if you have a lot of conviction on it moving up, you can take naked long calls, right? And if you are really bullish and you expect the stock to move a lot, which if we're in a TTM squeeze and we're expecting it to fire, we are expecting it to move a lot. So naked long calls is probably one of the better options, right? The other thing you can do, which is a little bit cheaper of an option, is call debit spreads, right? Which is a little bit more bullish of a assumption, right? Than doing a put credit spread, okay? And it's going to benefit more from a bigger move, depending on which deltas you select, right? And it also enables you to do, like if you're following Amazon, it's a little pricey to do Amazon calls, where you're risking thousands of dollars on a position where you can just risk, a couple $100 on a, 20 to 30 delta call debit spread, right? You can also do call diagonal spreads, which is, a little bit less bullish than a call debit spread, but it's also kind of tilts the Greeks on your side because you might be slightly long theta, and gives you a little bit more flexibility with time. Call butterflies, right? Especially if you're near expiration. If it expires in a couple of days and you're thinking it might fire in the next 2 days, call butterflies are perfect to do. They're low risk with a high reward, right? If you can give yourself more time, like a week or two out, for the TTM squeeze to work out. But keep in mind that it's not very delta positive, especially if it's not within a week of expiration, right? So just keep that in mind, okay? Call calendar spreads is another one. You can still make good money on those, but you're looking for like a 20 to 30% return on a stock. Gives you a lot of flexibility. Can be long theta, right? And then there's put credit spreads, right? Which basically you're going to profit if the stock just goes sideways for a while, right? So if you're really leaning bullish on the stock and it's currently in a TTM squeeze, you can just enter put credit spreads and let theta do its thing, let time decay. As long as it just keeps trading sideways, you're gonna make money, right? And then once it does fire long, if it does fire long, those put credit spreads will turn into profit very quickly, right? Because they're moving far out of the money. Okay. And you want to look to exit the put credit spread at 50 to 75% of max profit. Okay. So just something to keep in mind. But just like I said, the more bullish you are, the more you're going to want to do one of those bullet points higher up there. Okay. So here I want to go over just some examples of the TTM squeeze and what it looks like. These are actually screenshots that Ketz sent me. So I'm just going to kind of break them down a little bit just so you know, because it's a little bit cleaner of a look on the desktop, right? And I do a lot of my charting and trading from mobile. So, let's look at Affirm here. And this is all of these ones that I posted here are ones that ended up working out, right? So this is on the hourly chart. And that's the other thing to note here. With the TTM squeeze, you can use it on any time frame, right? You can use it on the weekly, the daily, the 4-hour, the hourly, the 30-minute, the 15-minute, right? I've even used it on the 3-minute, right? When you're doing like intraday scalping, okay? But this right here is Affirm on the 1-hour chart, right? Okay, so on the bottom, on that bottom green circle that Ketz has circled there, see all those red dots there, right? That is the TTM in a current squeeze, right? Okay, and you can see the momentum is down, right? The wave is below the 0 line, right? So momentum is down. Okay, we're in a squeeze and we're starting to fire, and Ketz has already drawn the Fibonacci extensions for us here on this upper green circle here, which puts it at 34.37 or 32.7 at the 1618, okay? And Affirm actually ended up hitting 30.3, right? You can go back at the chart and take a look at that. It's currently the end of April right now, or April 25th, right? So, go back and take a look at the chart and see for yourself, right? Here's another one. This is I don't know how Ketz finds these things, but EVTL, which ended up hitting 11.95, right? And you can see all of those red dots there, and then one green dot, meaning it's currently firing long right now, right? And you can see both the waves here, TTM wave, TTM squeeze. The wave is above the 0 line, right? Those light blue and dark blue lines on the bottom, and then the yellow and dark red lines up there, they're all above the 0 line. So momentum is positive, right? So you can start leaning into there while it's in the squeeze, right? But, you should be more patient and wait for confirmation of it firing long, right? So you see that first green dot, that is your trigger for entering long, right? Positive momentum, green dot, time to go, right? So with the Fibonacci extensions that Ketz drew, you had 10.86 as the target, ended up hitting 11.95. So that was a great trade, pointed out by him, okay? Gold. So this one, gold is just the king of fake outs, but here we are, same thing. So he's got a couple of different, this must be TTM wave A and TTM wave C, but you can see that deep red there that he's circled there, and it's just starting to turn positive there, and it's breaking the trend line here, right? And so you draw your fibs. 1272 puts us at 1967. The 1618 puts us at 1981, okay? That went on to hit 2002, okay? So another TTM squeeze that ended up working out pretty darn well, okay? Let's see here. Last example that Ketz is showing us here. So this is actually NQ, which is ended up firing short, okay? So, and that ended up hitting 13,183 today, okay? So, you know, and he's got the cloud on here. So we're below the cloud. That's the Ichimoku cloud up there. You know, this red box and yellow oblong looking shape here. That's the Ichimoku cloud, okay? Fibonacci extensions put us at 13,817 or 13,741, okay? You see the red dots there, and then you see it turning green with the momentum going down, okay? Momentum is negative here on this TTM wave, and momentum is also slightly negative and below the zero line here, okay? TTM Squeeze Pro, same thing, okay? So once that fires, once that momentum starts turning negative, that's a go for going short here. So we were looking for 13,817 to 13,741. We got it plus more, okay? So you can see how valuable, and that was a move from, you know, 14,000, right? So, you know, got 260 points on that original target, right? And then with gold, I mean, gold went from 1950 to 2000, right? With EVTL, it went from 8 to 1195, right? Which is almost a 50% move, you know? So a lot of value here, right? So yeah, so one of the other ones I wanted to look at, yes. So this one happened today. So I'll show you what it looks like on my chart. So I saw a little bit of a squeeze here today in this range right here, okay? You can see that light blue line inside of that dark blue line. That's the squeeze, okay, on the hourly chart, okay? And then it starts breaking up above here, right? So I actually already took this long because on the 3-minute chart, you know, we were just kind of consolidating underneath this 4240 zone, okay? And then once we broke out of that, that was my trigger for entry there. But, you know, also having the squeeze here helped as well. Now, as far as momentum goes, right, you have RSI here trailing up, right? So here, I'll put the center crosshairs here. So RSI was trending up, MACD was trending up, okay? And DI plus was starting to trend up, okay? And actually started to cross DI negative right here. So all the momentum was turning positive here, okay? And then you see what happened, right? We fired from that 4240 area all the way up to 4300 today, right? And that was my target on the ES, and we hit it after market close. We actually, before close, it hit 42.95, which was just absolutely beautiful. Now the other thing I wanted to look at was RTY. Okay, so this is just the king of fake outs here recently, right? But you know, here's an example of it firing long. Okay, on the daily. Okay, so you see this light blue line inside the dark blue line here. Okay, and then it started to break out above the dark blue line, and then it literally went from like 13, just above 1300 to 2460, right? Now here's the other thing. Let's draw our Fibonacci's here. Oh, sorry. So this is the actual range. Sorry. There we go. Okay. So that's the actual range there. And you can see it hit that 1618 level and then almost reversed perfectly. 1618 was at 2433, ended up hitting 2460. Okay. So not too bad there, right? So you see the value of the Fibonacci's here as well. Okay. Now let's take a look at the weekly chart. So you can see on the weekly chart, big time squeeze right here, right? Okay. Now, we had a little bit of a fake out here, right? So if you were looking at just the weekly and not the daily, you know, you might have had higher targets by looking at the weekly here, right? So yes, you did get that to go up and hit that 1618 on the daily, but looking at the weekly, you would have thought, we're going up a little bit here too. So, you know, you look at the RSI, you look at the MACD, all of those are trending down during this consolidation phase. So we're actually losing momentum. So that was kind of the tell that RTY might end up moving down, right? And that's exactly what ended up happening there. Okay. So, you know, this is why, like I said, you know, you don't want to base everything just off of one thing, right? Like I use TTM Squeeze, I use RSI, MACD, DMI, volume, Fibonacci's, moving averages. You kind of have to you have to learn them all and you have to tie them all together, right? Because in trading, there is no one size fits all approach, in my opinion, you know. But at the same time, I do try to keep it simple, right? Simple to me, but you know, you have to kind of factor many different things into the equation, okay? Let's take a look at TradingView. So there was a couple of setups I wanted to take a look at. I believe, what was it? Bitcoin, Facebook. Okay, so actually, let's take a look at Doge real quick. Doge shit. Okay, so here's one right here. So you can see down here, all the red dots here, and then it starts turning green here. Momentum is starting to change a little bit. Now, so you might have taken short here, but I'd have to switch out to RSI here. But you would notice that momentum was actually starting to turn a little bit more positive. And you would have, I didn't take this trade, but you would have caught a 19% gain right here on Doge, right? Once that thing came out of that squeeze, okay? Let's see. What was it that I wanted to look at for Bitcoin? Okay. Oh, yeah. So I think this is a fail, right? So here's the squeeze down here. You see the red dots, right? Okay. And it actually, if you look at it, okay, we did kind of fire out of here and head up to here. Now, I wonder if you take the Fibonacci from this range here. Okay, so yeah, it actually did kind of work out if you would have taken it to 1618, right? So if you would have taken here the break of this range and TTM firing long, it would have hit your 1618 extension, and it would have reversed from there, right? So just, you know, be good at plotting those ranges using Fibonacci extensions, and you're just looking for that 1618 max, okay? You know, you can always use trailing stops if it decides to go more, right? But, you know, be conservative with your targets here. Use the Fibonacci extension 1272 or 1272 and 1618, okay? But where did the TTM squeeze go? But so, you know, the other thing I wanted to point out too was in the wave there, the wave was kind of lower. Oh, there it is. Okay, yeah. So you can kind of see how the wave is lower than this peak here down at the bottom on the left. That's showing me that momentum is slowing down, right? And if I pull up the MACD, which I'm not going to do because it's, you know, you would see that MACD is kind of doing the same thing, right? Momentum is slowing down, and there was a big time divergence on both the weekly and the daily chart for Bitcoin, which kind of was the telltale sign that we were a little overextended and we're looking for somewhat of a pullback, and we ended up getting like a 50% plus pullback in Bitcoin after that, okay? So, but that's, you know, this is a little bit longer of a video than I thought I would do, but I wanted to be thorough and cover as much as I can. If you guys have any questions about the TTM Squeeze, just let me know in the comment section or in the Discord, or let Ketz know. Ketz uses the TTM Squeeze all the time. So, if you want to try and play around with it with yourself, using TradeStation or Thinkorswim or TradingView, I encourage you to do so. Just get familiar with it and play around with it. And if you have any questions, let us know. But that's all I have for you guys. Have a good night. Happy Monday. And let's make some money on Tuesday. All right. Have a good night.